All right, to discuss this further, I'm now being joined by Professor Vikas Singh, who's an economist and author. He's now joining us live from Hyderabad. Professor Singh, thanks so much for joining us here on World Business Watch. Let's talk about the global impact here and the global risk for markets this week. Which are the biggest ones?
Morning, Shivan. Good morning to all your viewers. I think the biggest risk is reacting to everything that President Trump says. I think we have seen over the last 1 month, from doomsday prediction to S&P back to where it was from the lows when the president declared on Liberation Day the tariff that he proposes to impose on other economies. I think it will be better for the investors to look at their stocks and plan this in keeping in mind what's the earning for these investment that they have made. I think focusing on or looking at the ticker, what President Trump says, or how the economy is responding worldwide is not going to be good for the retail investors. They must choose their stocks well and focus on those stocks rather than, being influenced by all the din and the noise.
Understood.
I think the Fed rate is a pivotal point. Though my view is that it's going to be status quo. Every Fed hike or decision is political economic, but this time it's going to be more economic because the Fed chairman really understands that decreasing the rate of interest is not going to be good because US must brace for a recession if tariff decisions are not changed quickly enough.
Understood. Professor Singh, as you rightly mentioned, not reacting to everything the US president says, I think that is causing the biggest risk to global markets at this point. That is something one needs to filter out and not act on behalf of what the president is saying and when he says it. But at this point, how crucial do you also feel is the commentary on the future rate path? You've also briefly mentioned about the upcoming Fed decision and what role that will play. But what about the commentary around it?
I think that's a great point. I think what Trump said over the last 1 week, that he's not going to finally sack the Fed chairman. I think I see some kind of easing out his view against Fed chairman. Maybe the Fed chairman may his commentary may be easier on the economy. He probably not be harsh on Trump, but I don't see a rate cut at all. I think investors must also realize that what Donald Trump has done in terms of raising the tariff, especially with its key partners like China and the European Union, Canada and Mexico, is going to slow down the US economy. There's no doubt about that. He may say that he's negotiating, but these tariff talks take a long time. It can't be done in 3 months or 6 months. They take time. And in the meanwhile, the US economy will suffer. Don't go by what's happened in the stock market. Stock markets are largely led by the Magnificent Seven. They have done well, but that doesn't mean that it's hunky-dory in the US. US economy will suffer unless there is a speedy action to making sure that China and the other trading partners are on board with the US. And I don't see that's happening, in spite of whatever President Trump says about China willing to talk and China desperate to make a deal. I don't think it's going to be that easy.
Again, going back to your term, don't believe everything Trump says, because at this point, China and US don't seem to be on the same page whatsoever, not by a long shot. But I want to also get your thoughts on this, Professor Singh. The mounting tensions between India and Pakistan at this point, how do you feel those will impact foreign flows to the Indian markets? Will it evoke some kind of reluctance to deal given the mounting conflict, the mounting tensions?
I think initially we thought it's going to affect, but I think it's now becoming clear that there won't be a war. That's for sure. And I think the investors are waiting and watching, but as time goes by, they will also realize that the war is not going to be on. There is going to be some kind of a skirmish, if at all. But the Indian investors must also realize, and especially those who are paying for war, that war is not a great thing. I think it doesn't do anything for the economy, it doesn't do anything for the people. How many people do you want to kill and how many people should get killed to avenge 26 people? There are better ways to handle, what's the difference between us and North Korea if we start baying for war all the time? It's not good for either India, definitely not good for Pakistan, but in a war, everybody gets a bruised nose. So,
no, I understand your point. No, definitely, rightly said. And India has gone through this several times in the past. There is nothing really to prove here by defeating another country once again. War is not the way forward. We have seasoned leadership taking decisions in a different manner this time. And India is definitely going to give a befitting reply, which has been made clear by the current leadership. But I also wanted to get your thoughts, keeping India in mind, the Q4 earnings in India meeting investor expectations. How does that impact the outlook for investor returns in the short or even in the medium term?
I think Q4 earnings are good, but I think, Q4 earnings and its impact is going to be on the short term and the medium term. But my advice to retail investors is to look beyond the Q4 numbers. I think one of the biggest challenges that investors face is to start focusing on what numbers are organizations declaring in the first week or second week of the quarter. Look at take 15 days, 20 days, a month to choose your stocks well. Focus on economies, focus on organizations which have a huge moat, focus on sectors, and focus on companies which are governed well, and choose those stocks, reacting to what result is declared this quarter and investing or selling out on those. That's not a great way to make money. Investment should be for the long term. If you're traders, I don't have any advice for them, but for investors, look at organizations, look at companies which are going to make money for you in the long run. Also, another thing, the world is changing very, very quickly. What used to take about 2 years now can happen in about 3 months' time. For example, many organizations, many companies which were monopolies are not going to be monopolies anymore. So start looking at those, start churning your portfolio, but whatever decisions you take it for the long term.
Professor Singh, not mincing any words, giving it straight, and I appreciate that. Thank you so much for joining me here and making time for us on World Business Watch.
Thank you, Shivan. Bye.